Hi, and welcome to the Monthly Skinny, where we dig into the most recent numbers from the Twin Cities housing market to help tell our story, where we've been, where we're at, and where we're headed. I'm Cari Linn, member of the Board of Directors of the Minneapolis Area Association of Realtors. It was the best of times, it was the worst of times. This famous line from Dickens leads us into our present situation here in the Twin Cities housing market. In the best of times department, we've got a nearly unprecedented buyer's market, with low interest rates and prices combining to form some very attractive and affordable buying opportunities. Buyers have a lot to smile about. The median price range for January was $155,000, a decline of 24.4% from last year. This skyrocketed the Housing Affordability Index up to 202, up 35.6% over last January, and yet another new record. This means that the median consumer income is 202% of what's necessary to qualify for the median-priced home. Keep in mind, lender-mediated foreclosures and short sales have an effect on these numbers. The affordability index for lender-mediated properties is even more off the chart, coming in at 245 for the month of January. But the index for traditional properties sits at 154. While this is lower than the lender-mediated market, it's still at its healthiest rate since 2004. Attractive affordability is having a positive effect on buyer activity, as pending sales increased by 10.3% over last January, the 8th consecutive month of year-over-year increase. In the worst of times department, an incredible 59.9% of closed sales in January were lender-mediated foreclosures and short sales, up from 25.4% a year ago and 9.5% 2 years ago. Lender-mediated activity will remain significant throughout 2009. Also, under the worst of times category, we only reached a January temperature that was above freezing once, and that was not until the 31st. But that's a topic for another day. The silver lining here is that the faster these distressed properties are sold, the better off the market will be. It is important for foreclosures and short sales to work through the cycle so the market can more quickly return to something resembling normalcy. In sum, the Twin Cities housing story is truly a tale of two markets. For buyers, improving affordability combined with a shrinking number of houses for sale mean that it is go time. For sellers, a tougher market means they need to be smart about pricing, marketing, and negotiating. I'm Cari Linn, and that's the Skinny for this month. Check back again next month for the latest.